Global share markets delivered a strong return in July with a 4% gain. However, we have to bear in mind that we also saw a very strong Australian dollar performance, so that reduced the gain on an unhedged basis only down to 1.1%. The key drivers of the strong global share performance were a very robust gain in the United States, with the Standard & Poor's 500 index up more than 5%. The other share market that performed very strongly was China's share market, which recorded a gain of more than 9%. There were a couple of key drivers for the robust performance in July. In the case of both the US and China, we saw very strong gains for retail spending as well as industrial production. So that indicates that there is a recovery story going on. There's also very supportive measures by the central banks in both countries. We've got very low interest rates. We've also seen the central banks expand their balance sheets. For the Chinese share market in particular, what we're seeing is the central bank give guidance to the banks themselves to increase lending. So that's very supportive for shares. By contrast, the Australian share market only delivered a modest gain of 0.6% in July. There were a couple of strong sectors. The materials sector, such as resources shares, delivered very strong gains of up 4% for July because of the strong gains in commodity prices. So if we looked at iron ore, the iron ore price is above $100 US a tonne. If we look at the gold price, it's approaching $2,000 per tonne. So these are very strong indicators for corporate profits in the mining sector. Now, by contrast, the energy sector fell. So the energy sector, if we think about oil prices, they're still weak. There's also concerns about asset write-downs in that sector. So the Australian share market delivered a very modest performance in July. Regrettably, the Australian economy still looks like it is weak. We have seen some positive data in terms of the June employment with a gain of more than 200,000 jobs. However, we've seen a continued rise in the unemployment rate, such that the unemployment rate now stands at 7.4% compared to 5% earlier this year. So the virus is still having an impact. And we can see that particularly with July's consumer sentiment. News that the Melbourne virus outbreak has required a lockdown in Melbourne itself has unfortunately caused a fall in consumer sentiment. So this potentially indicates that the recovery for the Australian economy will be further delayed, but bearing in mind that we've got very low interest rates and we've got the federal government with a very assertive stimulus program, that ultimately suggests there is a recovery on the horizon.